As of 11:53 a.m. Eastern Time, SoundHound Ai, ticker SOUND, is trading at $15.94. The stock has been navigating a volatile session, opening at $16.11 and touching a high of $16.27 before pulling back to a low of $15.72. This tight trading range on a volume of nearly 17 million shares speaks to a market in a state of intense deliberation, a tug-of-war between bullish conviction and bearish skepticism. Many investors see this price and immediately think of the meteoric rise from earlier this year, perhaps assuming the explosive growth phase has cooled. But that surface-level observation misses the seismic shifts happening just beneath the numbers, a reality that far exceeds the simple expectation of a momentum stock taking a breather. The common narrative surrounding SoundHound AI is that it's a high-flying, speculative play on the artificial intelligence boom, a company that got a significant boost from an association with NVIDIA and is now settling back to earth. The expectation is that its best days of triple-digit percentage gains are in the rearview mirror. However, the reality is far more complex and, frankly, more compelling. The company isn't just riding a wave, it is meticulously building the infrastructure to become an enduring pillar in the voice AI space, and the recent financial data provides a stark contrast to the narrative of a cooling stock. Let's challenge that common perception directly. While the stock price has seen a pullback in 2025, the company's fundamentals are not just strengthening, they are accelerating at a blistering pace. The second quarter earnings report was nothing short of a landmark event. SoundHound posted record revenue of $42.7 million, a staggering 217% increase year over year. This wasn't a slight beat, it was a fundamental outperformance that blew past analyst forecasts and forced a significant upward revision of the full-year revenue guidance to a range of $160 to $178 million. This isn't the sign of a company losing steam. It's the hallmark of a business hitting a critical inflection point in its growth trajectory, where its technology is translating into tangible and rapidly growing top-line results. Investors who are fixated on the daily chart might be missing the forest for the trees, focusing on short-term price consolidation while the underlying business is firing on all cylinders. This disconnect between market perception and operational reality presents a significant opportunity for those willing to look deeper. The market seems to be pricing in a slowdown, but the company's own guidance and recent performance suggest the exact opposite. Many traders on platforms like Robinhood or SoFi Invest might see the volatility and hesitate, but a look at the core business reveals a more robust picture. The daily and weekly price action reflects this underlying tension. The stock has been in a period of consolidation after its explosive run, building a base of support. We're seeing significant institutional activity, with entities like the Vanguard Group and BlackRock holding substantial positions. This isn't hot money chasing a trend. This is long-term capital from some of the world's largest asset managers, indicating a level of conviction in the company's long-term strategy. They are not simply looking at the Apple stock or Tesla stock of today, but what could be a key technology provider of tomorrow. Furthermore, the recent surge in options activity points to a growing belief among sophisticated traders that a significant price move is on the horizon. Call option volume has been unusually high, suggesting that many are positioning for a potential breakout to the upside. This type of activity, often seen on professional platforms like Interactive Brokers, signals that the smart money is paying very close attention, anticipating a catalyst that could realign the stock price with its fundamental growth. For the individual investor using Schwab Intelligent Portfolios or a Fidelity brokerage account, understanding this institutional positioning is critical. It provides a layer of validation that goes beyond simple price charts. So, what exactly does SoundHound AI do? At its core, SoundHound provides conversational artificial intelligence technologies. Its main offering is the Houndify platform, a suite of tools that allows businesses to integrate voice and conversational AI into their products. Think about the voice assistants in your car, the automated ordering systems at a drive-thru, or the customer service bots you interact with over the phone. That's the space where SoundHound operates. Its technology is built on decades of research in speech recognition and natural language understanding, allowing for complex and natural interactions. The business model is primarily based on licensing this technology to enterprises, creating a recurring revenue stream. This is a crucial distinction. It's not a one-off product sale, it's an integrated partnership that grows as its clients' usage grows. They also have a popular consumer-facing music identification app, which provides a valuable stream of data and brand recognition, but the real engine of growth is the enterprise licensing. Recent strategic acquisitions have supercharged this model. By acquiring Amelia, an enterprise AI software provider, and more recently Interactions, a provider of AI-powered virtual assistants, SoundHound has rapidly expanded its customer base into new verticals like finance, healthcare, and retail, while also adding over 400 patents to its intellectual property portfolio. This is an aggressive and intelligent expansion strategy designed to capture market share in a rapidly growing industry. The macroeconomic environment certainly plays a role. Concerns about inflation and interest rates can make investors wary of high-growth, not yet profitable tech companies. However, SoundHound is carving out a niche that is arguably becoming less discretionary. Businesses are desperately seeking ways to improve efficiency, reduce labor costs, and enhance customer experience. AI-driven voice solutions offer a direct path to achieving all three. A recent partnership with Red Lobster to deploy its AI phone ordering system across all their restaurants is a perfect case study. This isn't a pilot program, it's a full-scale rollout with one of the largest restaurant chains in the world. This deal, on the heels of achieving a footprint of over 14,000 restaurant locations, demonstrates the tangible return on investment its technology provides. It allows Red Lobster to handle every call, manage multiple orders simultaneously, and free up their in-restaurant staff to focus on serving customers. This is the reality of SoundHound's business. It is solving real-world operational problems for major corporations. Looking ahead, the future outlook is exceptionally bright, both for the market and for SoundHound's position within it. The global speech and voice recognition market is projected to grow at a compound annual growth rate of over 23% through 2032, reaching a value of over $81 billion. This is a massive tailwind. SoundHound is not just a participant in this market, it is an established leader with a differentiated technology stack and a growing roster of blue-chip clients. The company is targeting adjusted EBITDA profitability by the end of 2025, a critical milestone that would likely attract a new class of investors. With a strong balance sheet boasting over $270 million in cash and no debt, the company has the financial flexibility to continue investing in research and development and to pursue further strategic acquisitions. The primary risk, of course, is competition. This is a space that includes some of the biggest names in technology. However, SoundHound's focus on a customizable, independent platform gives it an edge over the closed ecosystems of tech giants. Businesses are often hesitant to build their core customer interactions on a platform controlled by a competitor. SoundHound offers a neutral, best-in-class solution. Do you think SoundHound's focus on enterprise solutions gives it a durable advantage over consumer-focused tech giants? Comment below with your take. In summary, the expectation that SoundHound AI is just another volatile AI stock whose moment in the sun has passed is a profound misreading of the current situation. The reality is that we are looking at a company in the early stages of a powerful growth acceleration backed by record-breaking revenue, strategic acquisitions, major client wins, and a strong financial position. The stock's recent consolidation is not a sign of weakness, but rather a reflection of a market that is still catching up to the fundamental reality of the business. The narrative of a speculative fad is being dismantled quarter by quarter, replaced by the hard data of a rapidly scaling AI company. The tension between the hesitant price action and the explosive underlying growth is palpable. For investors who can see beyond the daily fluctuations and recognize the long-term strategic execution at play, the current environment presents a compelling opportunity to engage with a leader in one of the most significant technological shifts of our time. The disconnect between perception and reality is where true opportunity in the market is found, and SoundHound AI is a prime example of that principle in action.